Hello friends. And welcome to my channel. In today's video I will be showing you how to do a long call in Robinhood. So what is a long call? The long call strategy gives you the right to buy the underlying stock at stock price A. You can make profit if the stock rises and beats the cost of the call. When should you use this play? You want to run this play when you believe that the stock will go through the roof. You have a strong belief that the stock price will keep going up. How do we set up this play? The setup involves buying a call at a strike price A most of the time. The stock price will be at or above strike A, so let's go ahead and pick our stock on Robinhood. For this example, I will be using Microsoft. We want to click Trade, then Trade Options. So here we are at the selection screen. We want to use this top bar to scroll to select a date. I usually pick dates that are 30 days or more away from the current date. As of this recording, that would be November 27th for me. I do this mainly to give me time on whether to close a contract or not. Make sure that the toggle switches are both on buy and call. So we want to scroll all the way to the share price, also known as the stock price. So most of the time I usually go with the contract that is directly above the share price. In this instance it would be a call at $217.50. We also have these helpful indicators on the bottom of each call. We have the break-even point where the stock needs to trade at expiration for you to break even on your investment, taking into account the current value premium of the option. And we also have the break-even percentage, which is the amount needed between now and the expiration in order to break even on the investment. So how I look at it is, do I believe that this stock will go up and beat this X price and this X percentage by the selected date? If I do, then I purchase the contract and just play the waiting game. In the event that I get lucky and it has beat these values before the expiration date, then I will go ahead and close the contract and collect profit. So let's go ahead and select this option contract. Determine how many options we are going to buy and enter the limit price we desire. Let us also open extra information by tapping on this limit price. Let's look at implied volatility. We want this to increase because it will also increase the value of the option. Another indicator we want to look at is the delta. Having a delta of 0.80 or greater, we can expect the option price to move up. Some people get in the money contracts and their strike price is below the current stock price. This will create less risk but also cause the premium price to be higher. After entering our limit price, let's go ahead and purchase it. So this max cost will also be the potential maximum loss. There you go, we have successfully did a long call option strategy on Robinhood. In order to collect profit, we now wait for it to beat those indicator values. If they reach that point, we now decide on whether to close or continue to play the waiting game to get more gains. We want to close before the contract expires in the scenario that the stock will tank. Thank you for watching my video and I hope I helped you gain some new information. Please check out the rest of the option strategies in the description below. Also feel free to check out my stock portfolio, which will also be in the description. And if you enjoyed this video, please give it a thumbs up. If not, please provide me with any questions or concerns in the comments section. Please feel free to also subscribe to be updated with any new videos. Till then, catch you guys in the next video and I hope you have an amazing day.